Good morning, everyone. Welcome to today's instalment of the Cyber Series. My name's Marcus Vaughan. I'm a Director of Growth Strategies at RiskLogic, and I will be your host today. Joining me today, I also have Michael Parent, who is the Cyber Insurance Practice Leader from Aon, and Daniel Moko, who is our Head of Cyber Consulting Services at RiskLogic.
Good morning, folks. Hello again.
So today, we've got a really interesting topic. We're going to be looking at who's going to pay for this breach. Really interesting agenda. We'll be looking at some recent hacks, losses that have made obviously front page media. We're also going to be looking at the fines and penalties and the regulatory situations surrounding those losses. We're going to have a really deep dive into the insurance world. So looking at the black, the white, and various shades of grey when it comes to insurance policies, but also what is trending from a market perspective with Michael. Then we'll be diving into a few critical success factors in terms of getting it right, understanding your exposures, and getting ready to purchase insurance if you're going to go that way. As with all of our sessions, this is a recorded session. We'll spend the first 20 to 30 minutes on content. We'll be having a pretty open discussion here. Finally, the last 15 minutes will be focused on Q&A. There is a panel on your screen there. You have an opportunity to wave around and type in any burning questions you might have. That'll give us an opportunity at the end of this session to essentially run through those questions, answer as many as we can possibly get to. As I mentioned before, we will be recording the session as well, so it will be made available afterwards. Without further ado, we might get started, guys, and we might start with a very recent and ugly hack. Let's talk about Marriott.
Yeah, before we do, we should mention we had a little bit of a discussion about which hack we concentrate on here. And, you know, unfortunately, there's an increasing number that we could have zeroed in on. You look at things happening at British Airways, for instance, or even earlier in the US, a large healthcare provider called Anthem suffered a significant hack of about 300 million customer and patient records. But we've decided to land on the Marriott hack. So we're going to do a bit of a deep dive into how this went down. Now, there are a lot of the details about the timeline and the intricate technical nature of this hack that we don't know. So it is currently being held by Marriott. The investigation is ongoing, but we'll talk about some of the things we do know, the timeline that we do know. So in September 8th, 2018, about a year ago, Marriott was alerted via a security monitoring tool to an unusual database inquiry. Now, that security monitoring tool was being performed by an external company, and they alerted Marriott, and the investigation and incident response kicked off. What was uncovered, and the scope of this breach is enormous. So what was uncovered was about 500 million individual records were impacted. So estimates vary, but you're looking around the 500 million mark. There might be some duplicate records in that. The other thing I think that is interesting to note, there was a really long burn time for the residency of this actor on the network. So I think this is still a point of the investigation, but estimates put it at approximately 4 years. So it's likely that the actor was on the network for about 4 years, which is the span of the Olympics. Mm-hmm. And when the investigation kicked off, they uncovered some really interesting things. So a couple of things. One, RAT, or a remote access tool, was uncovered on the system, as well as a particular hacking tool called MIMSCATS, which is able to sniff up credentials. And you know, interestingly, these are the sort of hallmarks of a really sophisticated state-based actor. So we're not going to focus today on attribution or who's behind this, because a couple of reasons. One, we simply don't have all the information, so we'd be speculating. Speculating isn't really that useful when you're going down the attribution path, but we could probably make some educated guesses, and we can make those guesses based on the fact that despite a large volume of personally identifiable information having been taken, and information with a lot of value. So if you look at the numbers there, you've had 9.1 million unique payment card numbers taken, 5.25 million passport numbers taken, and a lot of biographical information of about 383 million customers is the number there. Names, addresses, arrival, departure information, date of birth, other sensitive information that people use when they're checking into a hotel, none of this information, as far as Marriott or the investigators can tell, have actually appeared on any usual dark web forums.
Okay.
None of it's been packaged up for sale, which makes us maybe possibly point to this could be done by a state-based actor or someone who's out to gather this information for other purposes. So some reporting around possibly Chinese intelligence was behind this hack. And when you marry it up with other hacks that's happened over the last 4 or 5 years in the timeline, another one that springs to mind is something called the OPM hack, which is the Office of Personnel Management in the US, which is responsible for providing security vetting of US government employees. When you marry that to the fact that a lot of these employees stay at Marriott or Starwood hotels around the world, what you're starting to see there is a very valuable picture for intelligence actors to collect and to gather this information. So some really fascinating details there about who might be responsible. Putting that to one side, another interesting point that comes out of this hack is Marriott actually acquired the Starwood brand of properties in, I think, about 2016, gentlemen, is that right? That's right. Mm-hmm. So the original database of the reservation system where this information was taken from was a Starwood system. So Marriott inherited this mess, I guess you could say, from Starwood, and it points to really, I guess, taking a sharp razor-right view at those integration of systems when you're acquiring a company. And I mean, that's very easy for us to sit here and say, and very much easier said than done, but it is one of those, I guess, unknown unknowns that boils to the surface. And, you know, it highlighted some really poor fundamental errors on Starwood's part. So if we want to unpick this just a little bit, Starwood knew that there was inherent security issues with this reservation system, and they knew for some time. So previously, there had been another hack of this same reservation system in 2015, and they knew it was susceptible to certain types of malware. So that, I assume, would have been disclosed to Marriott in the due diligence procedures. I don't know what happened, but it's just another, I guess, interesting fact of this ongoing and huge breach.
So they're in the gun from a number of regulators. I think the European regulators in particular are looking at handing out some pretty interesting fines and penalties for this.
Oh, the numbers are staggering. So I know that the Information Commissioner's Office in the UK, for instance, has levied a £99 million pound fine on Marriott. It's sitting there at the moment. I don't know what that's worth, about 250 million Australian dollars, maybe 500 million. I think Aussie's going at the moment. Yeah. But you know, I think this is the beginning of the tip of the iceberg. You'll see from regulators coming in, and this is, I guess, in the US space, where you'd expect some sort of natural legal action or regulatory action.
Well, and I think that's the interesting point here, isn't it? We've got an American-based company based in Maryland now exposed and very much in the line of sight from a GDPR perspective, which raises an interesting question around what does that look like for organisations that are Australian or New Zealand based? You know, what kind of regulations are you exposed to when you're operating maybe in country from a footprint perspective? There's not many businesses that aren't online these days. What does that mean from a regulatory perspective?
Yeah, I mean, from a GDPR perspective, which is where this fine is being coming from, Australian businesses are in the same position, and GDPR legislation, or the regulation around GDPR, doesn't care where you are based. It's the information you collect. So an Australian company here, potentially with no footprint outside of Australia, let's say a hospital, who collects a lot of people's data who come in for triage whilst they're on holiday, they have the right to recall that information at any point in time. I mean, if an Australian company fails to do that, if an Australian company fails to comply with GDPR, not even a data breach here, just failure to comply, they could potentially face a fine or penalty. There's issues around that, as in handing down fines and penalties from one jurisdiction to another, given that there won't be an asset to allocate that fine to, but it certainly does raise the spectre. Certainly something to consider. As much as the criminals are getting better and better at coordinating, law enforcement on a global basis is getting better at coordinating as well.
So okay, so interesting question. Let's say you are a hospital group or any sort of group in Australia. You may be complying with GDPR, but one of your suppliers, which might be sitting on an information asset or managing an information for yourself that is considered sensitive from a GDPR perspective, if they're not compliant and they have a breach and you're the originator of that information, does that also put you in the gun from a regulatory point of view?
As far as I'm aware, GDPR or not, parking GDPR even, if you are the original holder of that information, you have responsibility. It doesn't matter who you pass that on to.
Yep.
So GDPR is no different to Australian legislation.
Okay. Just digest that for a moment. Okay. So we're seeing a lot of, I guess, losses in the media when it comes from a data breach point of view, Michael. And this is, obviously they duly have to report it to the regulator. That's obviously then discoverable information becomes very public, ends up on the front page of the newspaper. We all look at it and go, reputation will get hurt. What about business interruption? Because this is not necessarily something that has to be reported out and openly, a business interruption loss. I mean, we hear lots about data breach, but are you seeing from your experience in claims, business interruption losses occurring?
Yeah, absolutely. I'm actually assisting right now with a very large business interruption claim for an Australian company. These claims are in the market space, and something that I've certainly tried to be focused on for quite some time is business interruption is going to be, in many instances, more damaging than a data breach. But we don't hear about them quite as much. We don't hear of the consequences of them as much because there's possibly no need to notify the OAIC. Even if there is, the OAIC will be worried about the data component and not worry about the business interruption component. But I can say insurers are concerned about the business interruption aspect of cover. The breadth of it, for one, and the ability for a loss to manifest very, very quickly is giving insurers a lot of concern.
So it's a very big undercurrent that we're not getting exposed to on a daily basis, but is there.
Yeah, absolutely. And that's something that we've been focusing on for quite some time. When the NotPetya and WannaCry issues of 2017 arose, I happened to be on a global call with my global colleagues and the US, who had never worried about business interruption, never as a key component of the coverage. The penny dropped. And they're like, we get it. Business interruption is beyond critical. And pretty quickly thereafter, some of those bigger clients started buying even more coverage because they saw the criticality of that changing the risk dynamic.
Yeah, okay. From a cyber insurance perspective, we have a lot of conversations with clients, obviously, about cyber. Less so around cyber insurance these days, but we do typically ask the question anyway, just more from an interest perspective, because there's a lot that ties in there. I still get the feeling there's some skepticism around insurance paying out. So I'm really interested in your take of what's going on out there. Is it actually, how much is black and white? How much is grey? Are insurers actually paying claims? Like we do hear still a lot of that, which may be, I guess, an inhibitor or a barrier to right up to a board level actually saying, yeah, we do need to insure for this risk.
Yeah. So we've heard over the course of the journey a number of claims, cyber claims that have been declined, and we look into every single one of them that we can possibly get our hands on. And inevitably, far more often than not, we find out that it's not a cyber policy that's declined. It's rather a different line of insurance that has declined what could arguably be a cyber response.
Okay.
So we do see that quite often. The elephant in the room is a claim that we can touch on if you'd like. But very importantly, I probably want to stipulate right now that cyber insurers are trying to pay claims far more often than not.
Yep.
I'm acutely aware that the pay ratio, and I should say that that's a claim multiplied by the number of times a claim arises and reduced for the number of claims that an insurer will decline.
Yep.
So a bona fide claim that comes through, not the quantum.
Yep.
I believe that most of the key insurers that I deal with are in the high 90s, mid to high 90s, which means for every claim they get in, they're going to pay 95 of those 100 claims that will come in or plus.
Yeah. Okay. So claims coming through, they're assessing it where it is a claim they're paying.
Yeah,
typically, I mean, that's what we're seeing.
Yep, and we typically see they go above and beyond.
Okay.
So if there's ambiguity, they're prepared to pay because everyone knows that there is this microscope over the insurance industry. Cyber is the newest line of insurance.
Yep.
It's probably going to get a good amount of scrutiny.
Yep.
Cyber insurers try to go out of their way to make sure it does what is expected at the time.
Okay. One of the big infamous cases that is out there, we almost touched on this, is obviously the Zurich and Mondelez case that's happening there around the non-petcha loss that occurred, and I guess the fact that that's held up in the courts based on it being a potential act of war. Just talk us through that. Like, what's going on here when we see this? Because this would obviously be a concern for many buyers and saying, well, hang on a second, if we're subject, is this going to pay or not?
Yeah. So that brings up this topic called silent cyber. I was roughly touching on it before, but it certainly brings home this thing called silent cyber. And what that means is a cyber event could give rise to coverage under multiple lines of insurance, depending on what that incident was and the consequences thereof. It's a fact that right now there will be crossover between insurance policies for a cyber incident.
Yep.
So, and a great example, let's talk about this, Mondel. It doesn't fit perfectly, but it's a really good one to talk about. The claim has been declined under a property policy, not a cyber policy. So the war and terrorism exclusion in the client's or the entity's property policy is what Zurich have made the declinature under.
Got it.
Yeah. And that's the specific terminology that they've used as well within that particular war exclusion.
Got it.
So the devil's in the detail a little bit there. Yeah. Maybe they were hoping that upon review that property policy may give them cyber coverage.
Sure.
Because we need to underline there's not been any property damage stemming from that issue against that entity. It's rather a cyber incident which has given rise to a loss of property value. The property policy is declining it right now based off an exclusion. That particular exclusion is quite a challenging exclusion that's certainly brought up an interesting one. And I can assure you that everyone in the insurance market, let alone the cyber market, is keen to see how that plays out.
Yeah, it's a really interesting point. I mean, 9 out of 10 articles don't drop into that level of detail on the fact that it's sitting on a property policy as opposed to a cyber policy. But in any case, I mean, that's going to have ongoing effects for every time there's a major loss, a major claim, that has an on-flow effect to the insurance market from a premium perspective. More recently, we've seen, pick a line, pick any insurance line, and we've certainly seen, I guess, a market cycle of hardening. So premiums are going up. And I think one of the most prominent examples we've seen is D&O in particular, where you're having from 50% to 1,000% increases on a D&O point of view. What does the cyber market look like at the moment from a premium perspective for organisations in Australia and New Zealand?
Okay, so a little bit to unpack there. So from a premium perspective, cyber premiums are reasonably stable to slightly increasing. I'd probably also say the same for retentions as well.
Okay.
Retentions and premiums are reasonably stable to slightly increasing. It's probably fair to say that the early adopters of the insurance solution are probably no longer benefiting from the grandfathering, if you will. Okay. So the premiums are now going up to where the rough marketplace is. Retentions are going up to where the rough marketplace is for new purchases. For new purchases, they're already at that level now, so give or take. When we talk about that more broadly, though, we still need to talk about silent cyber to some degree, because we are seeing insurers retracting coverage in certain areas, and we are seeing our cyber market expanding where it can. So it's an evolving beast. If we're talking around the transitionary phase of the broader market, give it 12 to 24 months, and the silent cyber that I spend a lot of time talking about won't exist, because markets will form a position. And it will not be permissible for markets to be silent anymore. They will proactively cover or proactively exclude cyber from their policies, which will help to form exactly what the cyber market should do. Right now, the cyber market is transitioning. Higher retentions, higher premiums to some degree. But more importantly, the coverage is broadening out. We can talk a fair bit about that. But in some areas, crime is a great example. Some crime coverage is now being tested, primarily around that social engineering stuff. Some cyber policies will give that cover, because maybe there's this belief that cyber should fill in some of those gaps. And right now we're seeing that the transition is not just dictated in cyberspace, by claims.
Yep.
It is being also dictated to by a broadening of coverage.
Yeah, and every policy is literally different. Literally every policy is different, so it's not a blanket situation. What does good look like? So if you're talking to a client around trying to get I guess coverage that makes sense. I mean, it's the cheapest, the best. I mean, what's your take here? What's your advice in terms of getting good coverage? What's in there? What does that look like?
So I liken it to my US colleagues, and keep in mind they're 10 plus years ahead of us in this cyberspace.
Yep.
So what I can say is with most US companies, they go above and beyond to demonstrate how good they are at what they do, and the professionalism by which they go about explaining their risks and mitigating their risks.
Yep.
So if I'm going to recommend one thing, it would be to spend a good amount of time getting under the hood of your business,
Yep.
Figuring out what is good, what is bad, and what you can do to improve that position.
Okay.
And taking your insurers on that journey.
Yeah. Okay.
So we've seen companies that maybe didn't have great security,
Yep.
And a great process. We've taken them through the journey, they've procured the insurance. Insurers kind of roll the dice a little bit, saying, okay, you're telling us there's a journey. We can see what the 12 to 24 month plan is.
Sure.
Sit down in 12 months. Are we on track? Yes, hopefully. There's some of that whereas if they hadn't have provided that, if they hadn't have done the deep dive, if they hadn't have gone through the journey, if they had have just said, here's some reasonably basic information, we probably wouldn't be in the same position.
Yeah, got it. Okay. And in terms of finding the right fit for clients from a coverage and an insurer perspective, I mean, what's your advice there?
So large corporates, I would absolutely be advocating a blended program between Australia and the rest of the world.
Yep.
That's primarily the UK, it's primarily London markets, but certainly Australia, like get a good blended program. Australian markets will be quite proactive, but London again has been doing this for quite some time. So they'll have hopefully a better feel for coverages, what can be provided, and we can all obviously then distill that down to here to make it more relative to an individual client.
Okay. That's good. I'm going to go through just a couple of quick things and do a test of what's in a policy and what's out of a policy. So I've got a few curly ones down here. Ransom payments, in or out?
In.
Okay.
I should pay. I should just very. You would be reimbursed for the payment. The insurers will never fund it for you. They'll reimburse you. It's always your decision as the insured to pay that or not.
Sure.
And we've spoken about some of the complexities of paying those ransoms and the efficacy of paying them.
Yeah. We typically don't advise, obviously, pay ransoms from our perspective. But anyway, as I mentioned, every client has their own decisions to make around that. Okay, business interruption.
Yeah, absolutely. And that's probably the area that is evolving the most. It's fair to say 5 years ago it was good. Now it's really good.
Okay.
So business interruption claims are paid on a regular basis.
Yep.
If you do have a business interruption claim, as is the case with other lines of insurance with business interruption within it, they take time.
Yeah,
they take effort.
And it complex.
They are complex. So you need to go through the journey. Don't expect $1 million check to hit your desk, day one. It takes time, but absolutely they're in.
Okay. Reputation damage.
Your stock standard policy won't include it ordinarily. There's a handful that have that included, but rarely gifted. So as in no sublimit or no agreement for that insuring clause.
Yep.
It's something that you typically need to ask for, but most good insurers these days will provide a sublimited amount of reputational harm.
Okay.
The challenge is quantifying reputational harm.
And what that sublimit looks like as well. It's
the
never-ending kind of amount of supplements that can be built into a policy.
Exactly right.
Okay. Property damage.
Yeah. So this is again where maybe the cyber market is evolving, growing. Maybe there's an element that the property market is potentially hardening, and maybe there's an element of no one really contemplated this and we never knew where it was supposed to fit, if anywhere.
Yep.
So I can say certainly with clarity right now, cyber policies can give a measure, a type of property damage coverage.
Okay.
Now I should say it's less the physical property damage, it's more the non-physical property damage. So if you were to have a server that was to be compromised,
sure,
you may sit there going, oh, well, my server's dead. That's a property policy that should respond.
Got it.
It may not. You need to check your policy there. And what I am saying is that some cyber policies can proactively build that type of cover. It's called bricking into it,
okay.
Which is your device is becoming, in essence, bricked. better policies, which are still hard to come by right now, but they are giving some measure of property damage. So it's an evolving line of insurance.
All right, okay. Conscious of time, we better keep moving. In terms of critical success factors, getting this right, trying to mitigate cyber exposures, getting it right for insurers. Guys, what are the takeaways here? Daniel, I might start with you.
Yeah, look, Marcus, if I think back to the Marriott-Starwood breach, one of the things, I guess, that was fundamentally wrong there that they hadn't considered or assumed is one of those golden rules of cybersecurity is that you must always assume you have either been breached or there's a breaching process. So they didn't have a robust cyber response ready to go. And what comprises a robust cyber response? Well, it's about having that cyber response plan in place. And as we say, a plan is only as good as the last time you've tested it or practiced it, and making sure that everyone understands their roles and responsibilities in those plans. And I think what's really important, if you do have current cyber insurance and you're going through an incident, a severe incident or a crisis, let your insurer know and do it early. Don't wait till you're 30 days in and you're preparing your statement to the OIC. Tell them as soon as you possibly can. And most of your insurers or brokers will have ways that you can go about doing that. It'll be like a really critical part of a robust cyber response.
Yeah, it's an interesting. Every time we have a conversation with a cyber insurer, it is amazing to hear of how many times they get kind of almost just kept in the pocket, where under their coverage for that client, like they have a great panel of specialists that can assist you from literally the first half an hour of being hit by something.
Correct.
And I mean, every time we have a conversation, it's like this looks like a big once-off deal for an organisation, and in fact, when they talk to the claims team at the cyber insurer, it's the 5th time they've seen it that day. So there's a lot of experience sitting in there in the insurance market by itself, isn't it?
Yeah, I think to add to that, it's a different line of insurance. It's enacted slightly differently. It just takes time for people to understand that. And we obviously advocate for it, but sometimes that message can take a while to get through the organisation.
Yeah, absolutely.
Look, another thing that's apparent to me, Marcus, from the Marriott-Starwood breach is you need to have your due diligence squared up and signed away. And there was some really obvious and easy signs that they missed. And, when I look back into the Marriott breach and I see, for instance, those unique payment card numbers that were stolen, they were encrypted, but the keys to that encryption were on the same server. So when they hoovered up the encrypted numbers, they also hoovered up the keys to encryption. Got it. And if there was a robust due diligence process that would have happened, you would have seen all those stores that would have been exposed. So I think that's really critical. And not just when you might be acquiring, it's also when you're partnering with a company and they're providing services out to the market. It's really critical that you've undertaken that basic cyber due diligence, which again leads us to our next part, I guess, is understanding what your third-party exposures, what their response will be, and how that marries up to your own response processes. So if you look, say, in the first half of this year, there's been some really big third-party exposures I can think of, and one that comes to mind is the Indian consulting and managed service provider firm Wipro. So they suffered a significant cyber breach, and they were a third-party supplier to a lot of companies, Australian companies, US companies, and people needed to understand what that looked like and what it meant for their business as well. So getting that picture of your third parties, what they are, what they're supplying, and what their information security risks are and mitigations are, is really critical to having a sewn-up, engaged response.
Yeah, I think there's a point there around understanding what does your response to the market look like when one of your third parties may have had the incident. So how does that work in communications in terms of understanding the situation, being able to report a situation when it's actually not your situation to a certain extent.
And the reality is complicated cyber supply chains and other supply chains, the likelihood of you being involved in the third party breach is very high.
Yeah. Oh, especially today, the many integrations we have from a systems perspective. Michael, going to the insurance market, I mean, what are your key takeaways here in terms of looking at potentially procuring insurance?
Yeah, so differentiate yourself from your peers is probably for me a major item. Australian environment is good, bad, and indifferent. So try to prove that even if you're bad, you're prepared to work on that, and you're aware of what your failings are, and that you've got a plan. So have that plan. We touched on it as well. The A team, show your insurers what your A team is, and then once you do have the policy, embed their A team with your A team.
Yeah.
It is us against them, and sometimes them have their own A team.
Yes.
So let's make sure we know who we're working with.
Yeah.
And I suppose from a point of view is I want to find out what your most critical components are. What's the most critical issue for yourself, and how you're managing that? Like, demonstrate what you're bringing your risk scale down as quickly and as reasonably as possible. Quality of information, I think, if you're going to market.
Yeah. Okay. So understanding what that exposure is, understanding what the controls are, and then relaying it to the market to differentiate.
Yeah, absolutely. Yeah. And if you're across that more, insurers will respect it, even if everyone knows that there's holes, provided you are working on those holes, provided you're working with your insurers and being open and proactive around it, it will go down well.
So it's very much a partnership approach. Got it. Okay. Now comes my favourite part of the session, Q&A. So happy to field any questions. If you do have a burning question, please type them in. Wave your mouse around on the screen. There should be a Q&A panel that will show up. And we will take any questions that you might have. So please go ahead. Whilst we're waiting for those, Michael, I might throw one at you. In terms of buying coverage, do you have to hop on a plane to go to London? Or if you're a major organisation in either Australia or New Zealand, what's your ability to secure capital locally?
Yeah, so in Australia, I think I anticipate there's about $150 million worth of capacity locally, so it's not needing to go offshore.
Okay.
And we have some excellent insurers here. Let's be very clear about that. So there's not a fundamental need to fly to London. If you're building a tower of coverage for 200 million and you want it fully bespoke to your company, it makes a lot of sense to include London into that component.
Sure.
You don't need to be in London for that, but London is, as is the case with all London lines of insurance, it's very much a relationship-driven approach. So it pays dividends in the long run to fly to London if you are presenting your risks. But Australia is certainly a growing and emerging market. So I think you'll find 9 out of 10 times you'll do quite well here as well.
Okay. I've got a few questions coming through. So out of the ASX 200, how many would you expect have procured cyber insurance?
Okay. So we did a little bit of analysis around this a little while ago for a particular client that we were engaging with. I don't think we digged into the 200. We certainly digged into the 100. And I can't recall if we digged into the 200. But we anticipated at the end of that 50% plus had purchased, and that's from ones that we are definitely aware of. Ones that we are definitely aware are considering right now that we'll buy by the end of this year, and knowing also a number of that hadn't procured or some that were still potentially on the fence. So definitely 50% of the ASX 100 by the end of this year will have, and I'd probably say to be about a similar percent rolling that down to the 200 thereabouts.
And are there any benefits from a private business as opposed to an ASX listed organisation and taking out cyber insurance?
Well, if we're talking a private company, if you're talking smaller companies, there is this, if anyone's familiar with management liability, which is a combination of multiple lines of insurance for smaller businesses. There's the same sort of principle within cyber, which is you can get some crime coverage included more often than not. You can get that reputational harm included more often than not. So a number of additions added into the SME mid-market space to make it more appealing. I would certainly suggest that that's a benefit from a coverage perspective.
Sure.
Parking the issues of, say, D&O and whatnot. The benefits for private enterprise are probably even more than for your listed companies. Very much a generalization, but I'd suggest public companies may have a little bit more resources to throw at an issue if and when they arise.
Correct.
Private may not, and maybe that's probably worth touching on what a cyber policy does, which is your incident response. Those costs, those vendors are arranged for you. You don't need to flick through the yellow pages to find out a good vendor when it's getting very scary. That's arranged for you and the costs are included. You've got your liability protection, which if you were to have a data breach, there will be at some point liability issues here in Australia. And then you've got the business interruption as well, which is available to you.
It is interesting to know, gentlemen, that in regards to a major cyber crisis, vendors can be a bit like buzzards circling up above above you. So, you know, you can see some, I've heard of some stories of some very dynamic pricing of these companies coming in and offering to solve all of your problems at a very high cost. So that's where you have those existing arrangements. So they really start to come in.
I think the insurers, in conversations with, I guess, a few insurers now, their preferences to obviously accessing those. There isn't, I guess, a runaway of the horses in terms of pricing. And
The way I look at that is you can go about do that yourself if you like. These people possibly will take advantage from a cost perspective, and as a consequence, your insurer may start saying, well, that's maybe a little bit above and beyond.
Sure.
We could have got this done at this. It just removes that animosity, that potential.
It's no grey matter.
Which you don't need at that time.
Absolutely.
Of course. Okay, we have professional indemnity coverage. Does this cover cyber, or do we need an additional policy? I might just tack onto that, crime also.
Okay. So going back to the comment earlier around silent cyber, it kind of blends into that. Yes, I would envisage if an accountant, if a lawyer was to lose personal data or corporate data, they would probably be covered under a professional indemnity policy for the liability. But as we just touched on, cyber isn't just about the liability, it's about the incident response and business interruption as well as liability.
Yep.
PI, professional indemnity policies here in Australia, are pretty broad. I then also throw into that, yes, and it's a hardening market within the professional indemnity space. So there is a growing, emerging cyber program policy.
Yep.
It's possible that the professional indemnity market may start saying, well, for data breaches, for personal information, we're not going to respond. It's possible, something to keep in the back of the mind.
Okay. How do we best present ourselves to cyber underwriters?
Yeah, I think going back to the topics that we discussed before, there's certain things that insurers will want to hear straight up. So you may as well put them in a nice presentation or documentation. You may want to start, I think, with a high level, what do we do around protecting our data? What are our key jewels, which is information and computer systems, and what do we do around protecting that straight up? Some stock standards, it's a nice easy tick. Do you use multi-factor authentication if you're doing any sort of transactions? Do you use that? Do you encrypt data at rest and in transit? What are you doing around just the high-level things that insurers want to hear each and every time? There's probably 4 things that you could nail, and you'll get them on side pretty quickly. I think that's how I go about it.
Okay. Daniel, you're doing some work with insurers in terms of preparation for clients from a response perspective. Anything you'd add to that?
Yeah, probably a couple of things. And one of them being is just getting an accurate picture of what your current information assets look like is really important, and rating those by criticality and sensitivity, because a lot of organisations, information assets have grown quite organically, and it's very easy to lose track of those. So in order to present a realistic picture of what your cyber risk is, you need to understand what your information assets are and where they're going. So I think that is a general baseline, which is actually a lot harder than it sounds for a lot of organisations, is really important.
It's a really good point. We are going through an asset transformation globally, where your physical assets will, if they aren't already, be a smaller participating component of your balance sheet than your intangible assets.
Yeah.
But it has grown organically. It does come by acquisitions which people don't fully appreciate. We will hit the point, probably in the not too near future, not too far future, where these assets are actually far more important than your bricks and mortar, and people are proactively doing things around managing those risks. Yeah. I don't think we're quite there yet in the whole.
Okay, excellent. Well, we're out of questions, gentlemen. So thank you very much for your time. It's been very good. Thank you very much for having us, everyone.